Good afternoon or good evening, depending on when you're watching this. This is Tom Alexander. This is the weekly weekend update that I periodically do for the week beginning Monday, February 3rd, 2025, regarding the current position of the U.S. indices, what has happened, and what could be happening. So let's look into this. By the way, real quickly, if you're new and you would like to see more of these, you can see what I have said for the past couple of years by going to the website, alexandertrading.com, click on weekly update. It's free. Each weekly update contains, this is the one for this week. I'm going to click on the one from last week. Each weekly update contains a PDF of the charts that you will see, and sometimes actually they contain more charts because I cover gold, crude, notes, Bitcoin in the PDF and on the website. And then you can also access the videos that I have done in the past. So again, go to alexandertrading.com. Here, this is the home page, and click on weekly update. It's free, and you will get this information and you can go back a couple of years or maybe even longer. I don't know how far back it goes, and see what I was saying about other stuff at the time. Okay, let's talk about the stock market now. Real interest. I'll come back to this chart. I want to start with the indices. I'm going to sum up where we are, and then you can if you want to stop listening, this is where we are. The indices are at very significant inflection points, meaning they're close to all-time highs. We're going to move sharply away from this area one way or the other. I don't know which way. I had thought heading into until Friday afternoon's drop that the move would be up, but we had Friday afternoon's drop, and that throws a little bit of a bearish tenor to the week. So let's just go through the indices and talk about this in a little more detail if you're interested. So we'll start with the S&P. And as far as the levels that are important as we head into next week, it's pretty simple. It's the all-time high that we basically double topped against at Friday's Brent high. And then it's last Monday's crash low that was immediately retraced. And then we stopped on a dime. We have a buying tail here. We have a selling tail here. We're trading right at the midpoint of the range following this furious panic ramp to the upside that began on January 13th. So this is the SPX. Here are the important levels of the SPX. And again, you can access this report on the website. You can see these levels. It's also in a PDF if you'd like to print it out. All right, that's the SPX. Let's look at the index. And similar situation, you had the furious ramp on Friday that stopped on a dime and then declined, and now we're at the midpoint of several degrees of pivots in the index. Let's look at the Dow. Very similar situation. Came right up to an all-time high and then completely fell out of bed in the afternoon. Now, I want to make note here. We were up almost vertically off the January 13th low, 7.68%. Now, even if we had had a positive close on Friday, I would be telling you that we're not going to continue higher at this rate of change. So it's not necessarily super bearish that we're coming off of this level, but it's interesting and it merits watching because this level is a very major inflection point. It's a very major key reference area from an auction market perspective because obviously it's an all-time high. So the market's not going to hang around here for long. So here's the Dow. Let's take a look at the Russell. The Russell is its usual hot mess. Here are the levels in the Russell. You got still have this giant gap down here. Then you have this double top from last week and the week before, and a long way from a new high. And then let's just take a look at something else I wanted to show, the transports. Okay. And I typically don't show the transports, but the transports are also an index that a lot of people watch to confirm a bull trend. Well, it's well off its highs in November and is not come really that close to recovering yet. So that would go on the bearish side of the ledger from a intermediate to longer term perspective. Now I want to show you, this is the profile view. This is quote unquote market profile, the magic market profile, except market profile is not magic. Market profile is a way to view trade activity that can give you a unique auction market perspective. It shows you where value is and it shows you where extremes are. It shows you balance, it shows you trends. So what you're seeing here, this is a profile view, and the configuration here is basically quarterly. So each letter you see here represents a week, 1 week of trading. And you can also see since the end of the second quarter, we've gone practically nowhere. This is the close of the second quarter. This is today's, or no, this is Friday's close. So we've really gone net nowhere in uh, this period of time. You can also see if we were to take the trade from 2025 so far and combine it into the trade from the last quarter of 2024, what you have is a balance area. And what you also have is an increasingly mature balance area. And you have a test of the upper extreme of this balance area. So that's another reason that this is a major inflection point. You're not just going to hang around here. You're going to begin a new distribution one way or the other. What's a distribution? Well, I'm using the term in the manner that Peter Stellmeyer used it, which is a range. We're on the cusp here of sooner rather than later establishing another range. Is it going to include taking out these highs and going higher? Or is it going to be a range that slices through this entire structure? Don't know. All right, let's unmerge this. Now let's go down in time frame and get another view. Now what we have parsed out the auction into monthly profile units. This is November's close. We're almost identically at the level that we reached in November. So you can see we've gone net nowhere. And once again, you can also see this is all one auction, a lot of overlap in price over this time frame. Now I'm going to do this. I'm going to split this out. This is Friday's trade. You can see how close we were on Friday's trade. If we had closed in the upper half of this range, you would be leaning long on Monday just because of the position of price basis, the larger degree structure of the market. Now the situation is at best partly cloudy. We've traded back into the range of this ramp off the January 13th low, and you're still well above, you're still within a reasonable structure, balance, retracement structure, digesting this ramp off the January 13th low. So that's where we are from a price structure perspective, looking at it from the perspective of the auction of the market profile graph. Okay, let's look at a couple of technical situations. And we will look at first at NYSE data. The red is a 10-day moving average of NYSE advancing issues. Green is a 5-day moving average of NYSE advancing issues. The blue histogram is closing breath. And you can see the 10 and the 5-day reached extremes recently, and we've turned down from those extremes. Now, I've said this a million times. I'll say it a million more. This is a blunt instrument. It has to be used and taken in context. And all it takes for this to become bullish is for the market to retrace Friday's decline, close above these new all-time highs, breadth expand, and it gives a completely different picture than what we're seeing now. However, I will point out we are rolling over from upper extremes in these two indicators, which are it's internal data. It's not oscillators. All oscillators are moving averages of price. This is not a moving average of price. This is a moving average of data of NYSE advancing issues. And then we have breadth down here. Now, let's also look at VIX. VIX can be telling. It's not at the moment. It's hovering around this 16.5 area, and it has been for the past week. But there's no big compelling tell here from VIX. This market is going to break strongly back up, in which case VIX will decline, or it's going to continue to decline. Price will decline. We'll test Monday's low or take it out, and VIX is likely to increase. So that's where we are as we head into this week. I hope you guys have enjoyed this. I would very much appreciate it if you would click the thumbs up, if you would subscribe to the channel. Have a good week. I will speak with you again very, very soon.